Hi, I'm Raj. I'm the General Manager for International Markets at Hello Clever. We help merchants process local payments across Asia, Africa, and the Middle East. While traditional bank transfers can be slow, modern payment solutions like virtual accounts, local acquiring, and blockchain-based settlements can significantly reduce settlement times. Many fintech providers now offer same-day or even instant cross-border payments, helping e-commerce merchants like yourself improve cash flow and manage your inventory better. Look, this was a myth till recently. It is true, traditional banks and payment processors used to charge high FX spreads and hidden fees. But modern fintechs have been offering multi-currency accounts that let merchants hold and settle funds in different currencies. This reduces unnecessary fee conversions and improves your profitability. Additionally, local acquiring solutions allow merchants to accept payments in customers' native currencies at much lower costs. While fraud and chargebacks can be a concern, modern payment providers offer AI-driven fraud detection, strong authentication like 3DS 2.0, and local payment methods that reduce risk. Offering region-specific payment options like Alipay in China, UPI in India, or Pix in Brazil increases trust and decreases the likelihood of chargebacks. Choosing a PSP with strong fraud prevention tools can help merchants like yourself expand globally without necessarily increasing your risk. Think of money like a train. To send it from one country to another, it needs train tracks, right? These tracks are called payment rails, systems that move money between banks in different places. Some tracks are slow, like legacy old bank transfers, while others are super fast, like digital wallets and blockchain payments. See, if you send a letter to a faraway country, sometimes it goes through different mailmen before reaching its final address. The same thing happens with money. Intermediary banks are like mailmen that help move money between different banks when they don't have a direct connection between themselves. But just like extra mailmen can slow down delivery, extra banks can make payments slower and more expensive. Let's say your friend likes to pay for snacks with a card, but another friend prefers using a phone app. In different countries, people use different ways to pay too. Local payment methods like Alipay in China, Pix in Brazil, or UPI in India let people buy things using the payment options they trust and use every day. If a store doesn't accept local payment methods, customers might not even want to buy anything from you. Here are 3 payment trends we need to be talking about. Firstly, real-time cross-border payments. These are getting disrupted by networks like Visa B2B Connect, Swift GPI, and blockchain solutions, especially stable coin rails or even CBDC rails. And all of this disruption is making instant global transactions possible. This is an absolute game changer for e-commerce merchants like yourself, who need faster settlements, better cash flow, and more importantly, access to much larger markets out there. The second point I want to talk about is localized payment methods and alternative payment rails. These are taking precedence as shoppers now prefer paying with familiar local methods instead of just credit cards. This is evident from the penetration of alternative payment methods, especially across Asia. For example, there are about 50 million active credit cards in circulation in India, whereas there are about 900 million UPI handles. So, if India is a target market, and if you want to offer your services in India, you can't afford to not provide the UPI solution. The third thing I want to talk about is AI-powered fraud prevention and smart payment routing. This is a hot topic these days. Intelligent algorithms can analyze patterns, detect suspicious transactions, and auto-block risky payments in real time. Meanwhile, smart payment routing helps merchants automatically choose the best, cheapest, and fastest payment provider for every single transaction. By 2030, sending money across borders will be as instant and seamless as sending a text message. Why? Interoperability among systems will no longer be a challenge, and a global payment super rail will emerge, seamlessly connecting banking networks, real-time payment systems, blockchain rails, and digital wallets under a unified framework. Just like how the internet standardized communication, this next-gen payment infrastructure will allow money to flow instantly and cheaply across borders, regardless of currency or platform. Just imagine a merchant in Brazil accepting a WeChat Pay transaction from a customer in China, settled in real time without intermediaries. This will eliminate reliance on traditional correspondent banking, reducing costs by 80%, and unlock borderless commerce at an unprecedented scale. The merchants and PSPs that prepare for this shift now will dominate the future of payments.